So a lot of people have, so Port St. Lucie, when I moved here, nobody even knew about it. You couldn't even pay somebody to move to this area, I always say. They called it Port St. Lousy. And now it's like crazy because it's one of the most desirable places to live in South Florida. The next area that could potentially see that boom would be the Melbourne, Cocoa Beach, satellite beach areas. They haven't really seen the boom that we have. A lot of those areas really don't have the infrastructure. They really don't have. I mean, Cocoa Beach is a great place. People vacation there and stuff like that. And Port St. Lucie it's taken them a long time to catch up to, building the infrastructure, building the city places, the places where people can dine and hang out and, the community, aspect of, it being a city. But, I would say that it's just going to continue to move up the coast. We've seen it. It's already starting in Melbourne. You have a lot of investors that are targeting those areas because the price of a home up there is drastically different than down here. But yeah, I think that it's just going to continue. It's, even with these lows, we're still seeing, a ton of people coming here, and it's still a very desirable place to live.
Yeah, I mean, there's not a lot of other places. I mean, the East Coast is just completely built up, and I mean, and I'm sure it was probably like this 10 years ago with even Del Rey and all of those.
Yeah.
Where I mean, those were much quieter places, and now they're built up like crazy. Boca.
Yeah. Look at my parents. They bought in 2015. They bought in the Boca Country Club. Now they've sold their place and they moved up here now, but they bought that place for $250,000, and they did do a lot of work to it, but they sold it. And what was that? 2 years ago that they sold it for 500 grand.
If you're new to the show or haven't subscribed yet, click the like and subscribe button below as it helps with the algorithm, so you'll be notified when new and exciting episodes come out. All right. We have Joey Tumalo on today. Welcome to the podcast. And so, Joe, just to get started, I'm going to do a little intro for the guests. And so Joey Tumalo is a broker associate with Remax Gold in Florida with expertise in Treasure Coast and Palm Beaches, as well as in New Jersey. He's a certified luxury home marketing specialist, pricing strategy advisor, and short sales and foreclosure resource. He has sold over 100 homes totaling over $70 million in market value. So, Joe, I guess give us a little background. How'd you get into the real estate business, and how'd you become such a successful real estate agent?
Thanks for having me, man. I'm honored to be here, and seeing what you're doing, is awesome. Just seeing you start this podcast and where it's going, I'm happy for you.
Appreciate it.
Um, so I got into the real estate industry honestly because my mother told me I should. Um, I was kind of working, dead end jobs. I had tried, getting a career started in scuba diving, and that didn't really work out too well. I had fun, but it wasn't really a career that I thought would be good for me long term. So, I went to college, did the whole, degree thing, and that really didn't produce too much for me. So my mom kind of at the time was like, "Well, why don't you get your real estate license?" And I just told her she was crazy and I didn't want to sell houses. And eventually I just said, "Well, what do I have to lose? Get my license, see where it goes. Worst thing, I can always buy my own house if I have a license, and I ended up getting my license, and that was right before COVID. And thankfully I got in before COVID because I kind of established a good foundation for myself, and I started to learn, what it took to really be an agent early on. And then obviously COVID hit and everything just went from, 0 to 100 overnight. And, thankfully that really helped to, propel my career to where I kind of went. I had a great, 3 years all throughout, COVID and post COVID. And thankfully, I think that, when I got that start early on, that helped me to, continue to keep going even when COVID was over. Because, we've talked about it. A lot of the agents that started during COVID, they really didn't establish a good foundation, and they didn't really know what it took to be a good agent, when business wasn't so easy to acquire. So, all those agents are really struggling now because now it's back to that pre-COVID market, and it's a little bit harder to, make this a career. So,
Yeah, I mean, when it's funny, we've definitely talked about this. It's like when during COVID, when everybody was just trying to buy like crazy, any Joe Schmo or whatever, you looked good, and there's a lot of people who didn't really have the skills and the talent and weren't necessarily good people, and like they weren't they really didn't know how to, treat the customer right and, all those things. But they were like, oh, it kind of made them feel like they were good at it because I mean, you could just sell anything at that point. But now, obviously, as the market's shaken out and stuff like that, and you've really gotten to kind of show that there's a big difference between them, and that's kind of what shakes out all the riffraff and all the not so good people. So yeah, so I mean, it's been pretty cool seeing you get quite successful. But
thanks,
yeah,
man.
so then you started there, and so you started taking off during COVID, and I obviously talk about timing, right? That's a pretty that's some
Things
good.
are crazy.
Oh my god, super super crazy. And then so what was the market in Florida like before COVID? Like everybody had kind of known for years, you get the older people go down there for retirement, et cetera. But like what was the market like there?
Yeah. So, I mean, Florida's always been, a state where people would retire, move, have like almost like a second life, or just a state that, people always had second homes. And that's still, true for the most part. So pre-COVID, I'd say like, let's say 2018, 2019, the real estate market was decent, but it wasn't what it was. So values were definitely below what COVID brought them to. There was a lot of undervalued areas, but for the most part, we had a pretty strong market. I mean, properties, if they were priced right, they were selling. There was definitely a demand for, single family homes, townhomes, condos. Um, and, interest rates weren't extremely low, but they were still desirable. And for the most part, I'd say that it was a very stable market, and then, obviously when COVID hit, that just propelled things, into multiple offers, houses going for way above asking. The market just got really crazy when Florida was the place to be, So you kind of multiplied that by 100, and that kind of resulted in the COVID market.
And now, and for most of the Florida market, I mean, initially before COVID, was it still a lot of like you're saying second homes from the Northerners, or was it there was a healthy domestic market there?
I'd say it was both. Yeah. So pre-COVID, the local market, it was easy to buy a home at a reasonable price, and a lot of the, people that were born and raised here, that were here for years and years and years, they were able to acquire a home. And I mean, for the most part, they're still able to, but COVID definitely made it to where the local market had a lot of trouble to, own a home, and the I'd say the salaries in the area didn't quite keep up to what the home prices got to, because you were competing against the guy that sold his house in New York for, $1 million. He would come down here, he'd buy something for $500,000 cash, and then he'd just, save the rest of the money. And, the local market, the salaries weren't really keeping up with that kind of demand. So it was really tough for those, people to buy a home during that time. And I think that that still applies, a little bit. It's becoming a little bit easier for them to buy a home, but it's definitely tough to compete with people that are coming in with cash that, sold a home up north for double the price that homes are going for down here.
Yeah, and I think another part of it is so some of them sold homes, but a lot of them also so a lot of the people who work in New York City, um, they make a lot more money, and then they either their own homes or properties are worth a lot more, right? Or they have 401ks or other things and stuff like that. And there's some of these where you can borrow against them. And so I think this was one of the other ways that the wealthy really kind of have more flexibility, and potentially, I guess you could argue more liquidity in the sense that everybody was wondering. I mean, I think at one point you had a home that had what, like 36 bids on it or something like
Yeah,
that.
it was getting crazy.
And it was all cash. And everybody was just like, how, where is this? Like, how are people showing up with this much cash? I mean, I know a lot of people who got a lot of money, but that doesn't necessarily mean most people who are smart don't let just it sit in the bank while you're losing money to inflation, right?
Yeah.
But the wealthy people up in New York, they were able to borrow against it, I think, a lot, and that was how they were able to come down with all that cash. But that really screws the locals because if you don't got a 401k with $2 million in it, like you have no shot to compete against that stuff. And so
Yeah.
that definitely made it pretty tough. And now, so there's a few aspects too, though. It's one of it was like, I mean, all of it, I guess, stems from COVID, but there's an initial aspect that has a lot to do with just the policies that are going on in California and New York and stuff like that, where that's driving tons of people down. But then you also had the work remote aspect too, right?
Mhm.
It kind of took a lot of people. They were like, well, I could get the hell out of here. I can go down to Florida and work remote. Um, what did you guys, were you seeing a lot of people who were doing that? And is that kind of, and has that been
I
shifting back?
So I always had a lot of people that were coming down here because they were able to work remotely, or their job was just always a remote job. Um, I don't have a lot of people that are moving back because they went back to workplace. A lot of the people that I'm seeing that are moving from Florida and going back either up north, or I'm having a lot of people that are going to the Carolinas. All the people that I've had that have chose to sold and go somewhere else are primarily selling because they don't like Florida. So a lot of people came here during COVID and they found that they didn't really like it,
Yeah.
meaning mostly the heat, the climate, hurricanes, stuff like that. But I've heard that there are a lot of people that due to work, had to go back to where they came from. So I think that it's a combination of a number of things that are kind of, resulting in a lot of people leaving the state of Florida. I think that what was going on during COVID, obviously, it was just not sustainable. The amount of people that were moving here daily was just, it was crazy. And like you were saying, the people that were competing against those cash offers either had to waive appraisals, go tremendously over ask price to even acquire that home because you're competing with a cash offer. And it just wasn't really a healthy market, because that's, no matter where you are, you don't want to really see that go on because we were slightly undervalued, but that wasn't really, I wouldn't say we were that undervalued, to where all of a sudden values are going up. I mean, people were buying a home and a year later selling it for 100, $200,000 more than what they bought it for. That's just not sustainable.
No, no, I mean, and I remember having this conversation with my dad back in 2008 and, or 2007, it was just leading up into it, and it was everybody was flipping homes and everything back then, and I remember there was, like, townhouses across the street from us, and they were, like, I think originally selling for, like, 106 or something like that, and within a matter of a year and a half, 2 years, I mean, they were selling for 350, and I
Yeah.
was like, "These things have tripled in 3 years," and I just remember going to my dad being like, you're trying to tell me that in another 3 years, these things are gonna be going for 1,000,000?" I was like, at a certain point, like, the average person's income is just not going up on that kind of
Yeah.
level, and I was like, "It's
Something's
just
got to
not
give.
something's gotta give, it's just not sustainable." Um, and then also, like, you have to figure at a certain point, like, there's only a certain amount of people who have the capacity to do that, to be able to come
Yeah.
in and buy in cash and all that and stuff. And then it's an interesting point with Florida because Florida is kind of one of those we used to always people used to always talk about halfbacks, right?
Yeah.
People would all the northerners would go down to Florida thinking, "Oh, okay, I like the sun." They go down there for a week or two, it's great. And then they're like, "Shit, this is really hot," or
Send
whatever.
the summer down here.
And then they come halfway back or,
Yeah. Yeah.
and that's the
And
Carolina
that's
move.
and that's what I'm seeing the most of is people this summer specifically has been one of the hottest summers that I can remember. We haven't gotten a lot of rain. There haven't really been too many hurricanes so far this summer. We could still get some, coming up, but a lot of people after this summer came and went are saying, I am out of here because it is just brutal. And if you're not used to it, it's like you're living in hell. You can't even go outside, without getting nauseous. It's crazy. So, but I think that it is a combination of a lot of people that came here. Their work situation was different when they came to Florida. COVID obviously, set the stage for something that we really didn't see before. And a lot of people probably thought that that was going to be almost forever, So let me go to a state that I want to live in and that I could see myself being happy in. And then obviously stuff changes. But, I think that the way that Florida is leading the charge with just the way that they want to run the state, what they want to represent, I think that that's causing a lot of people to, you know, say, I want to be where they are. I want to live a life that, kind of encompasses what Florida is about, So I think a lot of people see that and it's desirable, because the policies of some of these other states and the way that they're running things just is, it makes you roll your eyes, and a lot of people want to be more involved with a state that, stands by, I guess, policies and principles and stuff like that.
Yeah, no, I mean, that's kind of, I mean, it's a good point. I mean, DeSantis has done it. I mean, you can't. It's hard to deny he's done a great job with Florida. I mean, and I mean, I know so many people I talk to, especially up on Wall Street and stuff like that. Like everybody, if they can, is got. I mean, they want to go down there because I mean, if you could turn around and not have income tax, I mean, a lot of people are putting 30, 50, $100,000 more in their pocket
Yeah.
a year just from not having the income tax. Um, so that I mean, that's huge. And then on top of that, Florida was unbelievable with their policies during COVID, and they were much more freedom
We didn't stop.
oriented. You guys didn't stop. And I mean, it's totally evident in the fact that I mean, no, I don't think anybody with a brain can deny that you guys in Texas, I mean, and now you guys, it's going to happen with the congressional seats you're seeing in Texas and stuff like that, where
Mhm.
everybody's fleeing these draconian states like New York and California that are super communist, and they're going down to where they can have freedom and they can, they're not getting taxed to death and stuff like that. And so,
Yeah.
yeah, I think the policies on top of everything, really made it Florida a super attractive place. I guess that's the part that's really interesting now is everything is like shaking itself out. Um, but I guess we'll kind of see with New York and stuff because it
Yeah.
seems like they're doubling down on insanity. And so, if New York doubles down on insanity, you guys may end up getting another wave, potentially of people coming down because they just can't take it no more. But it's yeah. So what's
Well, and even just, I don't even think that it has to happen for that wave to kind of come. Even the media narrative of potentially, you know, like for example, in New York City, that mayor getting in has caused a lot of people to even just say, I'm not even waiting for this to happen. Just the fact that people are even talking about this, I'm out. And so, we've seen that just even the potential for something like that to happen has caused people to say, I'm moving to Florida or I'm moving to Texas. So I think that, that definitely plays a big part in this mass exodus of people just fleeing those northern states and the states that are more, super liberal, that want to just not change the direction that they're moving in. And that's obviously, I mean, business is great for us because of that. But, a lot of people come here because they want to flourish and they see other people flourishing when they move to states like this. It's not really, a politics thing. It's more like people that just want to have a good life and a good life for their kids, because it's not like we're just seeing, far right people move to the state of Florida and Texas. You see a lot of center people moving and even a lot of people that are on the left, they might stand for those policies, but they don't want them necessarily in their neighborhoods,
yeah,
which I think is one
that
sign that, something's wrong there.
Well, that's the funny thing with them is that they 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 love to preach about it on their high horse, but then when it comes knocking at their door, they're like, "Hey, hey, I don't want that here," you know? I think we saw that up in, Martha's Vineyard and stuff where
And it's kind of funny because Florida has a lot of left leaning cities, and it's if you go down to Miami, I mean Miami is a Democratic stronghold, and even in those type of cities, it's not nearly as extreme as like a New York City or an LA, but Florida isn't just all Republicans. Florida is a mix of both, and there's a lot of areas. I know that when you go North Florida, it's more Republican, but South Florida, for the most part, has a lot of Democrats in it. So it's not like Florida's just made up of, far right. You got to mix everywhere.
Well, that's true, but I think there's been a bit of an historical shift. So where typically, so Florida obviously has a lot of the Latino community, and that Latino community in the Miami-Dade and all that area tended to predominantly be Democrat, right?
Hmm.
And we've seen a huge shift, a huge, massive percentage shift to them actually becoming either independent or switching over to the Republican side. And I think that's obviously contributing to a lot of why now Florida, doesn't it's not even really a swing state anymore.
Yeah.
So that's kind of, quite an interesting fact. So with the real estate market, so that's happening. So pre-COVID, it's pretty reasonable. You could still get a home for 250, 300, 300, whatever $1,000. Like a normal middle class family could get a home and stuff like that and get a property and stuff. So now COVID hits, everything goes through the roof.
Yeah.
And so many people are either getting priced out, bid out, whatever. So now, um, what's the take on with with interest rates and stuff? So
Hmm.
I guess the one angle is, so you have 60% of the market now that's locked in at these low interest rates, because when interest rates went down, everybody was pouncing on doing refis and all
Yeah.
that. So you have 60% of the people who have their interest rates locked in at under 4%. What's the thought process with the Fed and stuff like that, and how that's gonna affect if they lower, if what happens with rates and stuff?
So I kind of have a mixed feeling on the whole interest rate thing. I mean, obviously, being a real estate agent, the lower the rates are, the better my life is. That just makes it easier for me to do my job. But I think seeing the damage that was done during COVID kind of has me a little bit hesitant to just say drop rates, because now it's like everything that we're doing is almost in response to what we did during COVID. The damage that was done from dropping rates to that level is obviously apparent through not a lot of people selling their home because they're like, why am I going to move and pay pretty much double my monthly payment in order to move into almost the same house, So it's a little bit of a double-edged sword, but the bind that we're in now, a lot of people are not moving because it just doesn't make financial sense to them. Which when you look at your monthly payment, I just had a client that they were building a home and they're actually in the process of trying to sell, but they started the build process and they were not locked in, but they had a 3.5% interest rate when they started the build process. And the builder kept delaying the move in date. And they delayed it so much to where when they finally closed, they had a 7.5% interest rate.
Yeah, because
And
a lot of times when they do that, when a builder does that, the construction has to be done within the year to keep the rate, right?
so it's not even necessarily a year. So if you do a rate lock, you're only locked in for 90 days. So if you pay to do a rate lock, you're really only locked in for that amount of time.
Gotcha.
Now, it all depends on, what interest rates are doing and stuff like that. There's a lot of factors that play into it, but with them, the builder hadn't delayed, they were kind of at the mercy of the builder, and they tried to kill the deal and they would have lost their deposit and everything. So they had to buy the home despite their interest rate going up 4%. And that's a really, really hard pill to swallow. When you see that monthly payment at 3.5% versus 7.5%, I mean, you're talking thousands of dollars difference in monthly payment. And, I think that what is going on now with as far as like affordability goes, I'll just give you an example of Florida. Florida, it wasn't just interest rates, it was the insurance going up. So, like, I'll give you as an example. I bought my house in 2020. My interest rate was 3.25. My insurance was 2,500 when I bought the home. And obviously, in Florida, when you purchase your home, the taxes that the previous owner was paying is not going to be the taxes that you're going to be paying because the home is going to be reassessed the following year, and it's going to go up based off kind of what you purchased it at. So they kind of say to estimate 2% of the purchase price in St. Lucie County, which is one of the highest in the states. But after you factor in, taxes, insurance, interest rate, all of a sudden, I think I had $2,500 insurance. My taxes when I purchased the home were, I think, 5 grand, but then they went up to 6,800 and then 7 grand and then 7,500. So there were a number of things that played into my monthly payment going up. It wasn't the interest rate, it was the taxes and the insurance. So then if you kind of add that into somebody that's buying a home now, you know, that monthly payment's going to be tremendously higher than it used to be. So the affordability isn't just due to interest rates, it's due to, like, I'll give you an example. My insurance went from 2,500 to it was going to be 5,000 in July, but I was able to shop around and get it at 3,200. But still, insurance has gone up over the years, which has caused also monthly payments to go up. And somebody that's looking at that same house versus 4 years ago is now pretty much priced out of that home because the insurance is much higher, interest rate is much higher. So there's a number of factors that play into it, but affordability is just really, really difficult right now. I think that somebody was saying that, during COVID, it was pretty much like 70,000, was what you needed to be making to buy like a three, $400,000 home. And now it's like closer to, 100,000, 120,000 to even be able to afford that home anymore. So it's changed dramatically.
Yeah, it seems like we've never fully recovered from we're still have, like, lingering symptoms of COVID, I guess, um because so you hit the nail on the head with it, is that the inflationary things that came from COVID caused all of that. So, but it was the inflation, and then it was also the, like, dislocations and stuff. So I think one of the big things, I guess, to get into is the insurance. So right now in Florida, the biggest thing that's got everybody freaking out is just the insurance has gone up astronomically. And I guess it's just trying to get to a bit of the root on, so it seems like the statistics are come out to where it's basically, I think I have here that over the last, like, 173 years, there's been 305 total hurricanes slash tropical storm slash whatever. Comes out to approximately like 1.75 a year. So call it somewhere one and a half, two of them a year, right? Um, Out of that time frame, 97 of them were over a cat 3. Because if it's under a cat 3, it's pretty easy for you guys to manage that down there if it's
Yeah.
under a cat 3. That's like normal for you guys.
Yeah.
Um, so over that time, so now you're looking at over a cat 3, you're at half of one a year, basically. So people do have this impression like Florida's just getting bombarded all the time, and it's not like, I mean, like you said, this year there's not even really been one. Um, but so I guess it's been slightly increasing over the last 20, 30 years because the percentage looks like it's gone up a little bit of like above a cat 3 to like 0.75 as opposed to point 0.5. So it's gone up a little bit. But from what I was looking, it looks a lot of times like you guys have had a couple severe ones. Like, the
Hmm.
small ones don't really do the big thing. It's like occasionally like an Irma or something like that, and it does more damage than is done in 10 years sometimes worth of stuff, from a cost perspective. But what's the deal with regards to Citizens? Because it looks like what happened was back in 2022 when the market crashed and we had all the issues and all that stuff, it looks like there was like 9 insurers that all went out of business. And so Florida lost a lot of their insurers that kind of left and fled. So you lost a lot of the supply of that, and now you ended up with only a few insurers, and then that was a lot more risk for them to take on. Is that kind of the story with Citizens?
So Citizens was a state-funded insurance for the longest time, and it was kind of like the last resort, insurer in the state of Florida. Um, I think that, since I've been in real estate, a lot of the insurance companies said, listen, it's just too high of a risk to insure homes in the state of Florida. And a lot of them decided to pull out of the state of Florida. It may have been because they were mismanaged. It could have been a lot of, factors. But I never really heard of storms really putting these insurance companies out of business. Um, when we saw a lot of the companies start to pull out of the state of Florida, that obviously caused a lot of people to flee to Citizens. And I know that during COVID, they became the biggest insurance company in the state. They had the most people under their umbrella. Um, and that caused, I think, a lot of people to start to get concerned about how much they were at risk, that if a catastrophic storm ever came and took out, let's just say, two sides of the state, it would essentially put Citizens out of business. um, I don't know how legit that is, and if they potentially could have been put out of business. I know that a lot of times, like, for example, the last 5 years, the west coast of Florida has been just constantly getting hit back to back storms. It seems like they're all kind of making their way that way. The east coast really hasn't gotten too many direct hits. um, I do know that when those areas do get hit, you know the amount of damage is significant, but a lot of times, people's homes, stuff like that, it's not really astronomical to where they can't recover. The state always usually comes in and they usually help with funds towards getting the community rebuilt. But the amount of demand that these insurance companies kind of see during those times, in my experience, they've all been able to kind of handle it. And a lot of times, it's the companies that really aren't doing things by the books. They usually get exposed, and they're trying to screw people over by saying, "Oh, well, let's just say a hurricane came through and you got extensive flooding, and you didn't have flood insurance, but or you did have flood insurance, and all of a sudden the insurance company is claiming that water damage was caused by wind and not flood." So that's where it kind of gets to the point where, all right, this isn't really making too much sense. Why are these people paying all this money and now you're denying their claim during the most, I mean, this is the time where people need it during those storms.
Well, and that's the tricks. I mean, when I was doing a little research on it, I was finding that they were basically honoring, in a lot of instances, sometimes half. I mean, which is kind of wild. Like to your point, when you think I'm spending all this money on insurance, it's clearly all related to hurricane, whether that's flood, whether that's wind, whether that's whatever. I mean, it's all wrapped up into a hurricane. It's same thing. But then these insurance companies are using the fine print and the loopholes in a 50-page document that clearly nobody's reading the whole thing
Yeah.
because it's just um and it is kind of incredible, and they really get out of it, and then they obviously also leverage the state and the feds to help
Yeah.
them with being bailed out, which is pulling from the same taxpaying dollars. So our taxpaying dollars
Yeah.
have to go to do that, and then so they're kind of weaseling their way out of a lot of stuff.
Yeah. They really are. And I was talking to a couple contractors that were kind of like doing the math in their head as to what it would really cost to rebuild, let's just say, an area, that was affected by a storm. And what these companies are getting kind of as, funds is far more than what it really costs to rebuild. But then that kind of goes to, okay, well, is the insurance market a flawed, you know, market? Because if you really look at, what is getting billed versus what the actual cost is to maybe build something, it's far more than what, so these insurance companies are kind of getting hit pretty hard when these people go to rebuild a home. They're saying that it costs, let's just say $30,000 to, fix this water damage in the front of their home, when really it was only 10,000 to fix that water damage. So,
Yeah. It
it's
goes
it's
both
kind of
ways.
like a flawed system, and it's not just for homeowners insurance either. It's also the auto industry, and how these insurance companies, basically get hit. My buddy totaled his truck recently, and they said that it was going to cost like 150,000 to basically fix this truck. And it's like, if he would have maybe gone and got that work done outside of the dealer, it would have probably been half the price, but the insurance company pays out that much, and why they're doing it, who knows? But citizens, I know, with the amount of, exposure that they had in the industry, they required all their policyholders to carry flood insurance, by actually July. So, of this year. So my insurance was Citizens, and I was going to be required to carry flood insurance, even though I'm not in a flood zone. And it was going to go from, let's say my insurance was I think it was 3,500 a year, and it was the flood policy that I was going to be forced to get was like a $2,000 a year flood policy. So my insurance was going to go up substantially. I understand the position that they're in, but a lot of people were kind of forced to get this flood insurance, and they really didn't want any part of it.
Yeah. Yeah. I mean, and I mean, yeah, that goes back to what we're saying with it's like, so, okay, if you get that, and then if you get water damage and, and then they did this with Jersey a lot, was after Sandy, was like, if you wanted to get insurance, you basically had to put your house up. And so, um, they kinda gave you the ultimatum kind of on that. Yeah, it is quite interesting. One thing I did notice though is that are they making changes? Because it seems like, so as of 2022, 2023, they're working on, um basically privatizing more of it and taking less of the risk off of citizens, right? And then
Mhm.
inviting and bringing more competition or other insurance companies in. I believe there's like 14 new ones that have kind of come in, which that should potentially help having more and more competition. Um, and then from what you had also said is I think they've also put into the law where it's much more difficult for a lot of these lawyers to start suing and doing all this other stuff because, to your point, there's the fraud and there's the suing that's also the insurance companies are getting hit with. That is, so there's people taking advantage of them, which is also probably end up inadvertently coming back negative on the rest of everyone else, right?
That's exactly what happened. So during, I would say it's been going on for a while, but one of the main things that caused a lot of the insurance companies to pull out of the state of Florida was not just the risk for hurricanes. It was a lot of these companies that were going around, and they were knocking on people's doors, and they were saying, "Hey, can I go up and inspect your roof? I want to just see if everything is good. We have a program that basically gets your roof, replaced and your homeowner's insurance will pay for it." So these companies were going around, and they were getting, I mean, tons of people to say, "Oh, you're going to pay a roof? I'm going to get a free roof out of this. Why wouldn't I do it?" The company would then go, and a shingle roof that maybe cost $20,000 all of a sudden was being billed for $40,000. So the companies were in cahoots, with the insurance companies, and they were with, well, the people that were going around and getting the roofs, basically the contracts for the roofs, were in cahoots with the companies that were replacing the roofs, and they were getting them to bill 40,000 more than what it really cost. And these insurance companies were at the mercy of, I mean, they had to do it because the company was saying that it cost this much to replace the roof. So you multiply that over a number of years, and these insurance companies were just fed up with it. And they just said, we can't keep doing this. This is causing everybody's rates to go up so much. And it was really one of the main reasons why we started to see rate hikes was that whole roofing scam. And then you combine that with, the storms that were hit and the amount of exposure that these insurance companies had. Because if that many people were moving here a day throughout that whole COVID time, that's just more and more people that need insurance. So it was a combination of things that kind of caused the insurance rates to go up that much, over a very short amount of time, it seemed like. But, I know that a lot of people that don't have an actual loan, they sat down and they did the math and they said, well, if I'm paying 5 grand a year for insurance, I could take that money and put that money in a bank account, and I mean, in 5 years, I'm going to have a pretty good chunk of change. Really, it's the first 10 years where you're self insuring that's the most scary. But after that, I mean, any kind of work that you really could need, should be covered by that, money that you have put in the bank. And then you don't have to deal with the headaches of the insurance companies and battling them on, will you do this work? Will you not do this work? So a lot of people that own their home outright have caused, it's caused them to go that route.
Yeah. Yeah. And another thing I think also that nobody really talks about with the insurance companies, and I just know this from the finance end, is as an insurance company, they actually make a lot of their money. From my understanding, it's that they don't make a ton on the premiums, but what they make a lot of their money on is a thing called float. And so basically, it's like a time value money aspect where they get the money, they get the premiums in first, but pay out for the liabilities later, right? But so in
Hmm.
between the times of collecting the premiums, uh, till the time you have to potentially pay out, you can reinvest that money.
Yeah.
And that's what banking has this in the sense that you put your money into your savings or checking account, and they get to make interest on that money by it sitting there of your money. And by lending it out, because it doesn't just sit there in your bank account. They only have to keep a very small percentage as reserves. Well, similar for insurance companies. So they take that time valued money of paying it out and they reinvest it. But that also puts them a lot at the mercy of the market.
Hmm.
So a lot of these, I think sometimes where if they did not invest their money very good, and we saw this in '08 with the insurance companies with AIG and stuff like that. But if they didn't invest their money very soundly, and I think this was a part of the issue that happened in 2022 with all of those insurance companies going bankrupt. There was so
Yeah.
many that went bankrupt, but there wasn't exactly a lot of, like you said, there wasn't a lot of weather events to really attest to it. But that completely coincided with the 2022 market crashing. And
Mhm.
so you kind of end up in one of these where they're basically, because of their investments did poorly, it had nothing to do with the hurricane, but they're filing for bankruptcy and stuff like that, and that was kind of
Yeah.
to your point as well. So all these things have kind of really, but it does seem like Florida is turning a page. It seems like it's slowly but moving a little bit in the right direction where more insurance companies are coming in. Um, you know, I guess the big thing will be hopefully you guys don't have any too many bad hurricanes or anything like that in the near future. And then hopefully there could be some downward pressure. And also this goes back to if the property prices, if property keeps going up, then
Yeah.
that causes more of an issue because then from an inflationary perspective, they has to readjust accordingly because if the home's now worth 800,000 instead of 500,000 and the
Yeah.
insurance company's got to pay out on that, it's got to correspond. So that's where one of the things with Florida is I feel like, um, well, we were talked about this is there needs to be some kind of deflationary pressures to bring some of these costs down because people just are not making money in correlating like evenly with the fact of how much things have gone up. It's
Yeah.
and so I mean obviously you have some oil like I mean from an inflationary perspective like Trump's doing good with getting oil prices down. I think it's like 64 a barrel now. It was at 80. That
Mhm.
obviously carries through to the cost of everything, lumber, etc. Are you noticing is how's like supply demand of like properties coming onto the market in Florida? What's that looking like?
So, I mean, I would say that, during COVID, I mean, it was absolutely bonkers what the price of, a sheet of plywood cost, and how much it went up. From everybody that I'm talking to that's in the building space, contractors, stuff like that, for the most part, their materials haven't, it's kind of leveled off a little bit to where it's not what it was. The price of some stuff has stayed high, it hasn't come down, and, that's just the way that it's going to be. But for the most part, I would say that we're starting to see a little bit of relief when it comes to building costs and just the amount of money that it takes to, let's just say, build a home versus 3 years ago. Um, but these builders haven't stopped throughout all this. I mean, the market has calmed down a little bit, and these builders are still building at the pace that they were building, a few years ago, if not more. Because a lot of these communities that maybe were announced during 2021, 2022, they maybe didn't break ground until 2024. So a lot of these new communities are popping up all over the state, and it makes you wonder, are they building at a rate that isn't sustainable? Is there enough of a demand to fill all these homes? So far, it seems like there is. I know that a lot of the builders are having to offer crazy incentives in order to get the homes moving, but they are still moving. My parents' community, for example, nearly the whole community is built out and people are occupying these homes. So you know, you hear about the media narrative, how nobody's moving to Florida and stuff like this. But then when you look at stuff like that, you're like, well, I guess people still are, and they're anticipating that over the next 6 to 9 months, the builders are going to be offering some of the best incentives that they've ever offered. And I think that's because they do have a good amount of inventory that maybe hasn't moved, and they need to get people in these properties. But I mean, you just saw Buffett just invested, I think 1.8 million or billion into Lennar. So maybe we're starting to kind of get through the toughest of it. I hope. I think that a lot of the stuff that's been going on. Um, a lot of people think that we've kind of already been in a recession, and that we might be exiting that recession, but then others say it could get worse, which, it is possible.
Well, we talked about this actually, I think when we were golfing with that one guy who was he a contractor or he was a builder. And I remember that conversation. I remember this is the problem with the market, from whether it's Wall Street or whether or not it's carries into the real estate market is there's always a big delay in, the market responds, everything goes up, supply demand's out of whack, but it takes a while for the permits to happen, the building to start.
Hmm.
But then once they start, it's like a train moving, right? It's like
Yep.
very slow to start it and it's very slow to stop it. It's like it's not like an instant reaction to this stuff. And so the real estate market, when we were talking about this, I remember I kept saying like I was like the demand is there right now. I was like, but these builders are building. I'm hearing they're building like crazy. I'm like, eventually, and the one part I always propose this question, and this is the part I have a little trouble with is the everybody's talked the birth rates in the United States. We are not having kids like they used to. They used to have kids 6, 7, 8, 10 of them. Then, a generation or so ago, they were still having 3, 4, or 5 of them. And our generation is having one and a half. Like, I mean, we're not, I think we're actually below replacement value or replacement rate on the amount of people we're having. So you have to ask yourself, like, if they're building more and we're not having more people, at a certain point, like people would then have to own just many homes for one person. You know what I mean? The only other part that I wonder is part of this equation is how much is the now I know they're not staying in your 600, $700 million home, but with all the illegals and everything like that, I believe the numbers is something like so here in general, in Florida alone, there's 1.6 million, which accounts for 7% of the population of Florida. That's illegal. In New Jersey, it's 500K, which is 5% for the population of New Jersey. Obviously, big differences in population. But that is, we're let's just rounding for say, somewhere around 5, 6, 7% of the population. Now, a lot we've seen could be 10, 15 million people came into the country. They had to go somewhere. Now, I know they put a lot of them into one building, but like that's still taking up and occupying buildings that could be used or converted or whatever. Um, what do you think is the role in that? And do you think that some of this is what's keeping some of this demand up relative to all this building we're talking about?
I mean, I know that there's a lot of people that own second homes in the state of Florida. That could be why, a lot of them are still kind of buying up properties and necessarily they don't necessarily live here. I haven't seen a lot of with the, whole illegal immigration thing and people being deported. I haven't seen a lot of people that actually own homes be forced to sell because they were deported. Um, a lot of, the people that are here maybe illegally are renting by the room. I know that there's a lot of investors that I know that they rent to all Spanish people and they rent them by the room and they make pretty good money doing it. Is it, the best thing? I don't know. There's communities that are predominantly, all Spanish, Mexicans from South America. And you sometimes have a whole family living in one room and they rent it out for 500 bucks a month, something like that. Um,
But I think the point is, could those rooms, if they were not there, if you were the landlord, you would you wouldn't just have them sit there and be unoccupied. You would then rent them to other people. So there would be supply, right?
so you got to think about it. And I think it's actually more than $500 a month. If you have a four-bedroom home and you're renting it for, let's just say, 800, $1,000 per room, that's a good amount of money for one house. Most of them are in the mobile homes. They rent out the mobile homes. But then if you have to rent to one family, the amount of money goes down a lot because now you're renting that house for maybe 2,500 a month, when maybe you were renting it for 4 grand a month, renting it by the room individually. So
Are
is
they
that
getting
the
are they getting benefits from the state? Because like, this is one of the things Trump's talked about this. I mean, he made a lot of money back in the day on low income housing. Now, I mean, as a landlord or, uh, you can definitely make good money doing it, but your property is gonna get beat to shit. So it's kind of like
and it's not the most legal way to do things. So you got a lot of people that are kind of
but a lot of
teetering that line.
oh, it's not the most legal, but I think a largely if you're an investor, I think that largely works just like, I don't know if it's a great example to use with the EV cars, but, like, when the government is subsidizing it, then it makes sense to the landlord. It's beneficial. But when the government's not subsidizing it, the amount of trash and not paying on time and blah, 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 like, that's not necessarily worth it then. You know what I mean?
Mhm. Yeah.
When you know you're
Yeah.
getting a guaranteed check from the government, it's like, "Okay, whatever. I bought the thing at an auction for cheap. Whatever.
Yeah.
It's I can" exactly, kinda thing.
Most of the, I would say, illegal population, and whether they're here illegally or not, I have no way of knowing. But I know that a lot of the people that are working the manual labor jobs that are making minimum wage usually, most of those people are kind of segregated to one little section of a community. And usually that's the section that's the most, rental friendly. It maybe the houses aren't as desirable, but the rents are low, so they can afford to either rent out a house or rent out a room. But I haven't really seen it affect like the new construction industry, for example. Most of the people that are purchasing in those HOA communities that, had to spend 4 or 500,000 to acquire that home, most of them are working, a pretty stable job, maybe have a college education, are here legally. That doesn't mean that, a landscaper that builds his way up and eventually owns his own landscaping company can't own a home in a community like that. It's just rare. So I don't see mass deportations necessarily affecting that segment of the market just because the most of the people that are buying in those are either the second home people that are, living up north during the summers and coming down here during the winters, um, or, just the local market that maybe moved here and is living here permanently.
Gotcha. And I guess so that's the part that's interesting is so Florida is still kind of it hasn't become it's still very much a second home or retirement place. It's got I mean, some companies have come down, and it seems to be predominantly more in the Miami area
Yeah.
and
Yeah.
Tampa and stuff like that kinda deal?
But the bright line is helping to, and people have grievances with the bright line, and I don't blame them. But the bright line is going to be basically, and it already is running from Orlando to Miami, and so people can now commute, and they're going to have stops all throughout the Treasure Coast where I live. But now, somebody can live in an area that maybe is more, friendly, for first time home buyers or just the average person to own a home, because my area is a lot less than Miami, Fort Lauderdale, but they can still work down there if they chose to. The Bright Line can get them down. They don't have to commute. As far as owning a car, you don't have to drive down there, but the Bright Line can get you down and you could still work. Is that going to work? I'm not sure. We haven't really had it long enough to really see how many people are utilizing it. I know that a lot of people use the Bright Line from like West Palm to Miami, so they jump on and they, maybe go down a couple towns, a couple cities, and then they might work in Fort Lauderdale when they live in, let's just say, Delray or, West Palm. But we'll see what it does long term and if, people are really going to utilize that to, get to and from work.
Yeah, I mean, it would make a lot of sense because I mean, we kinda have it up here in Jersey, where everybody commutes to the city, right? And, um I mean, it is I mean, along the coast in general, almost everywhere. I mean, even if you look at the Carolinas, I mean, I couldn't believe, Wilmington, North Carolina is completely built up to
Hmm.
wazoo. Charleston, I mean, you can't find anything in Charleston. You gotta start heading out into West Ashley, Johns Island, and you're still paying $500,000 for something out there. It's just everything in those great locations is just it's hard to say it's not priced out of the average,
Yeah.
blue collar person. So it does make sense that, like, it would be beneficial to have something where, um, getting access to stuff that's not right along the coast, but having it where you could commute in would be beneficial, and then that would open up a bigger, larger area, so you'd also don't have to just keep building on top of each other.
Yeah.
Now, is there for
And
you guys so you're up in Port St. Lucie, Treasure Coast, is there still, like does Florida still have room to go up?
yeah. Yep. So a lot of people have, so Port St. Lucie, when I moved here, nobody even knew about it. You couldn't even pay somebody to move to this area, I always say. They called it Port St. Lousy. And now it's like crazy because it's one of the most desirable places to live in South Florida. The next area that could potentially see that boom would be the Melbourne, Cocoa Beach, satellite beach areas. They haven't really seen the boom that we have. A lot of those areas really don't have the infrastructure. They really don't have. I mean, Cocoa Beach is a great place. People vacation there and stuff like that. But and Port St. Lucie it's taken them a long time to catch up to, building the infrastructure, building the city places, the places where people can dine and hang out and, you know, the community, aspect of, it being a city. But, I would say that it's just going to continue to move up the coast. We've seen it. Um, it's already starting in Melbourne. You have a lot of investors that are targeting those areas because the price of a home up there is drastically different than down here. Um, but yeah, I think that it's just going to continue. It's, even with these lows, we're still seeing, ton of people coming here and it's still a very desirable place to live.
Yeah, I mean, that's I mean, we there's not a lot of other places. I mean, the East Coast is just completely built up, and I mean, and I'm sure it was probably like this 10 years ago with even Del Rey and all of those
Yeah,
where, I mean, those were much quieter places, and now they're built up like crazy. Boca,
yep.
you
I mean,
know
look at my parents. They bought in 2015, they bought in the Boca Country Club. Now they've sold their place and they moved up here now, but they bought that place for 250,000, and they did do a lot of work to it, but they sold it. And what was that, 2 years ago that they sold it for 500 grand, and it was like, that's a pretty good return for, I mean, literally 6 years, I think they owned it. But that's a testament to nobody knew about that area when they moved there. And you knew about Boca and you knew about Del Rey, but not at the rate that, it's known about today. So a lot of people are now finding out about these areas, and a lot of people that are coming from those northern city areas, so like New York City, you know the places that are kind of fast and have a lot of commotion going on, they like the Delray, Fort Lauderdale, Miami scene because it's more like, I guess, where they're coming from. But we have a lot of people that come to our area that are more from like the suburbs of New York and New Jersey, and a lot of people from Long Island and Staten Island. So it's interesting to see the influx of people and where they're coming from and why they're moving to certain areas. And I think it's just going to continue.
well, and I definitely agree with you. And then you also get like my uncle and stuff like that, where you have a lot of people who were been in Florida for their, they've either been there for years or whatever it was, and now they were used to it when it was a much more sleepy suburban area, and now
Hmm.
you've got all the Northerners kinda coming in, making everything just kind of change the whole scene basically for them, where
Yeah.
they wanted it more chill, relaxed, whatever, and so that was kinda like my uncle, where my uncle was in, what, Fort Lauderdale, I believe,
Yep.
and he was like, "This is just getting too crazy, too much,"
Yeah.
and so he loved being able to move farther up, like you said, sell your house, make more money off of it, then go up back where, it was similar to what it was like for him 15 years ago, and,
And
shit,
he
I
got
mean,
something a lot nicer than what he owned down there. The house that he owned in Fort Lauderdale is nothing compared to what he owns up here. So in most parts, they're exchanging a crappy home for a really nice home, and they're getting the atmosphere that they prefer. So it's like a no-brainer to a lot of these people.
oh, 100, I mean, you're making money on it, you're being able to upgrade from a crappy home to a good home, and then now, I mean, that's kind of what we're saying is that all these people, like, I would put a lot of money on it that he's gonna turn around and watch his home in Port St. Lucie, do the exact same thing that happened to his home 15 years ago in Fort Lauderdale, and so what he now bought now will probably end up being worth 20, 30, 50% more, over the next 10
Yeah.
years. I mean, he's gonna go double his home and then double his home again,
Yeah.
as he literally chases up the coast, and, yeah, I mean, I think, and for your area, I mean, for people, whether they've been there or not, like Stewart, Jensen Beach, like, there's actually lots of, like, really nice areas with some restaurants. It's really got
Yep.
more of the
The food's
Florida.
gotten a lot better.
The food's gotten better, even getting some of those New Yorkers with the Italian
Yeah.
food coming down. I see some
Yeah.
pizza places.
All these restaurants are opening up, and a lot of times they're coming from, maybe a city that the food is really good, and they're bringing all that here, which has been great. It's nice. A lot of options now. But it's funny because, recently I've been trying to diversify, and I've been considering getting into, the investment space, but it's still the values are still too high to justify that investment. It's like, I thought that over the last few years we were going to see enough of a low to maybe, say, okay, I'll grab a FHA loan and buy an investment property or something along those lines. Um, Now it's like you have to come in, and what I'm targeting right now is the auctions, and I'm partnering with a contractor buddy, to potentially grab an auction property cash, because to get a loan on a lot of these properties, and most times it's an investment loan, so your interest rate is higher,
Yep.
and then you have the taxes and the insurance, the rents, the rental market has gone down a little bit. And so the rents don't justify, so a lot of investors have kind of fleed these areas because the numbers just don't make sense to them. And they're having to go up to an area like Melbourne or Cocoa and hope that those property values are low enough to really make it all make sense, you know?
Yeah, I mean, and this is the conversation I had with so many people, and this is where actually when I started off, I'll be honest, like when I first started, I was like, oh, like we gotta have higher interest rates. Like we gotta tighten the belt on this. We gotta squeeze it. And I think I honestly I think Trump has slightly changed my perspective. And this is like where I kind of really do think that this is another argument to where high interest rates, I mean, it's basically fracturing the whole market. And to your point, from even an investment standpoint. So, one, from a regular homeowner standpoint, it doesn't really make sense. And these people are getting in over their skis and they're stretching themselves to the max to get into a home that they can't afford. And then you've got from the investment perspective, I mean, every time I've run, and that was the whole thing for me was like, whenever I would run the numbers, you can't base your investment. You can't go into a property expecting that your return is going to just be on the asset appreciation. Like from an investor's
Yeah.
perspective, you have to be able to make the numbers work from a cash flow perspective. And if you make money on the asset appreciation, great. That's a bonus. Um, you can bake into that calculation maybe for asset appreciation relative to normal inflation, you know, let's call it 3, 4, 5%. But you can't be putting into your investment saying, "Oh, this only makes sense because I think I'm gonna make 20% a year." Like, that's just not that bubble's not gonna go on for forever. So you can't do that, and to put in the margin of safety, so one, when you're going to buy one of these properties, at the prices you're buying at, and like you said, the price you're buying at, the amount, so now you have to come up with a lot more equity. Not a lot of people have the more equity. If they don't have the 20%, they gotta pay the
20%.
PMI. And if you
Yep.
don't have the 20%, now you gotta pay PMI. So some people get like, "Oh, I can a first time buyer, I can get in at a 5% or 3%." And it's like, yeah, but one, now you're financing a lot more, your payment's gonna be higher. But now you also have to pay the PMI penalty. It's gonna make your payment even higher. And then, um, on top of that, the interest rates, like you said when we first started the conversation, I mean, to go from an interest rate of 3.5, 4% to an interest rate of almost 7%. I mean, your payment could go from $2,500 a month to like $4,000 a month or more.
Mhm.
I mean, that is gigantic. And for somebody who makes buku bucks, that's not the end of the world. But we're not talking. If you're concerned about this, you probably need to really look at the numbers, and you don't have money just to piss away. And
Yeah.
so that's the part that I also think is completely fracturing this market. Is like nothing makes sense. It doesn't make sense to invest. It doesn't make sense really to buy. The only time it really makes sense to buy is if you're like, I need to build a family, I need to upgrade, and I'm going to be in this thing for the next 20 years, something, or
Yeah.
30. That's the only time where it's like, but if you're looking at it from a number standpoint, it just doesn't make sense to invest. And I actually think we were hoping, but from the building standpoint, if building costs haven't really come down a lot, that's a hard argument too. That,
Yeah.
you know what I mean? And I think that's what you're kind of pointing at with why is it that these builders are offering such incentives? And that's the big question is they were doing all this building, they had their projects started, they had to keep them going,
Yeah,
right?
like you were saying, it costs them more money to stop those crews from going and continuing than it does to just offer incentives. They want to keep things rolling. Like you said, it's a train. It has to keep moving. It costs them more money to stop the train than it does to offer the incentives, but keep the train moving. You know, it is. It's tough.
Exactly. I mean, and at the end of the day, I mean, they sink $20 million into a project. Some of these guys, I mean, they might make a profit, they might make a tiny profit. Some of them might take losses, but
Yeah.
from an investment standpoint, in one of those, instead of losing the whole $20 million, or maybe they sunk 15 million into it and they're halfway through. At that point, you're like, I'd rather offer incentives, and maybe I thought my IRR was gonna be 15%, and maybe now I might only make 2%, or maybe I might even just take a loss of 3 or 4, but it's better than, you know, losing 15 million on the
Yeah.
and then the banks looking to take other assets or properties or foreclosures. So, I think it's definitely going to be interesting. But I'm hopeful that if a lot of this supply comes onto the market, there could. The problem I think we talked about this was is it's not going to be a fast correction,
Yeah.
right? This is probably going to be like death by a thousand cuts kind of deal.
Yeah. Yeah. I think you're right. And it could be that we've been going through it for longer than people even realize, you know. I think that, you know, a lot of times we mask what really everyone is going through. Um, and the pain has been longer than people even realize, you know. I mean, people have been struggling for the last 2, sometimes even 3 years, and is that going to continue? I mean, the cost of groceries is still pretty much the same as what it was, and is things going to get better? Hopefully. So hopefully the policies that they're putting in place is going to relieve some of this pressure. But I don't think that we've seen the full implication of the tariffs yet. I think that, it's for the most part not as bad as everybody thought. But I think that after the summer is when we're going to really start to see that data come out. And I think that for the most part, the average person is struggling to even buy a home. I mean, it's almost real unrealistic for a lot of people nowadays. And that required salary keeps going up and up and up. And, compared to 25, 30 years ago, what it took to own a home versus today is drastically different. And I think that we've kind of talked about that you got to look at it if you're unsure of where you're going to be in a few years and the numbers don't make sense. Yeah, it doesn't make sense to buy a home, especially in this market. You're better off just sitting tight, renting, because the rents have come down a pretty good amount. But it's a case by case situation, and I think that the person that sees themselves being somewhere for 5 to 10 years, historically, when you look back on, the values of homes over that span of time, odds are your home is going to go up in value, even if we do see a dip, even if there is a correction in the market. uh, Most likely, long term, that value is going to come back up and you're going to see appreciation in that asset. Um, if you look at over long periods of time, I mean, the cost of homeownership is just going up and up and up, and it doesn't seem to be slowing down. Now, what happens in the next year, 2 years, that's a different story. So you got to kind of always, and like we were talking too about the condo market versus the single family home market down here. A lot of the headline news that you see, especially with the media, is, the condo market is crashing and, Florida is collapsing and, all this stuff that really, I mean, the condo market is struggling. It definitely is. And the Surfside incident is the main reason for that. They had to change the way that things were being done down here because of that collapse. And a lot of these associations are playing catch up with their reserve funds and work to the building. And now they all have to get the 40-year inspection. And a lot of them are overdue on concrete maintenance, roofs, elevators, stuff like that. So all these associations are now playing catch up, and the homeowners are being assessed pretty good amounts of money. I mean, I just had one, their HOA went from $800 to $1,200 a month, and they got hit with an $18,000 assessment, so
That is the one thing about Florida, man. It's so interesting is you do make up a lot of money on the no income tax, but they do hit you with these others, the HOA. I mean, the HOAs, the insurance, and property taxes, I think, are also not
mhm.
that
In
cheap,
St.
right?
Lucie, they're pretty expensive. 2% of the purchase price is what they kinda say to estimate. So, there's a full picture that has to kinda be looked at, before you decide to take the plunge, because there's a lot of factors that come into play.
Yeah. Now, so what's the New Jersey real estate market looking like? Now obviously with Jersey, it's a completely different Well, it has similar aspects because it does also get overflow from the city, but what's your take on the Jersey market?
So I got my license in Jersey because when Florida was slowing down, Jersey was continuing to go strong, especially where, we grew up, Ocean and Monmouth County. Um, the market was untouchable, it seemed like. And properties were still selling multiple offers, going above list price. And it seemed like Jersey was almost untouchable. This summer, we've noticed a slowdown.
Okay.
So it's almost like Jersey is kind of lagging behind Florida. Now, why? There's a lot of factors that come into play. I think that for the most part, you're starting to see people really cut back on what they're spending. Um, Give you, for example, my parents' rental in Lavalette. This
Yeah,
was
well,
the first year in their entire history of renting that they have not been able to rent all the weeks in the summer.
are you kidding me?
So
I mean,
we had,
and for context, their home is 3 houses from the beach, an absolutely beautiful, beautiful home right on in Lavalette. I mean, like, oh my god, if you would've I would have probably argued with somebody that was that was
yeah.
unbelievable.
So my dad was kind of panicking because he was like, "This is the first summer that we've ever had." He got somebody the last minute for the second week of August. He still has a vacancy the last week of August, and that's the first time that he's never not rented the month of August.
But
So I,
what do you think that is? Because, I mean, for us, that's New Yorkers that coming down. I mean, they book that stuff out usually well in advance. I mean, we see it with man, I went down to LBI, I was down there yesterday and, oh my god, I mean, the amount of traffic you'll sit in. I mean, you can only go down there at certain hours. You're gonna sit in hours and hours of traffic. What what do you think, would I mean, yeah, what would you think would cause that?
I talked to a couple people that, were interested, but they didn't end up renting. And a couple of them were talking to me about the following year, saying that this year they were just cutting back. They couldn't justify spending that much a week to rent the property. Some of them are renting for multiple weeks. And I think that it's just a sign that people are really trying to cut back on their spending and that they're still a little unsure about what's going to happen, as far as, with their finances. And it's funny because right around when I started to kind of see that, the resale market slowed down a little bit too. And I was talking to a lot of the agents that I know up there, and they were saying that they, the previous summer they'd hold an open house and they'd have 20 people come through, and now they were lucky to get maybe 5 people to come through. So I think that just as a whole, people are kind of waiting and just seeing what's going to happen. And not necessarily that they're struggling, but maybe they just want to kind of cut back because they're afraid of what the future is going to hold.
Yeah, I mean, and I mean, I know I was looking at, like, I mean, there's a lot of stuff where, people have been kind of pushing the credit limits for a while, putting stuff, you know, really, I mean, I would say since COVID and stuff like that. I mean, it's America's been doing this for a very long time, but the amount of stuff that was being put on credit, and then even you saw this in the auto market. I mean, the amount had been increasing dramatically, and you started to see a lot more defaults, over recently and whatnot in the auto loan market, and so the, it kinda makes sense because this goes back to the thing, at a certain point, it's like, "Okay, I got a credit card. Oh, I have another credit card," but at a certain point, like, the accordion doesn't go for forever,
Yeah.
and it to your point, maybe the market is actually, it's almost like we should have been in a recession, but everybody was kind of still somehow making that train keep chugging along, and now the train is starting to run out of steam a little bit. I think
Yep.
that kinda seems a bit of, people don't have that purchasing power. They're kinda stretched to the max. They can't keep pushing their credit to the absolute limits. The cost of just stuff going up so much, I think, is taking a little bit more of a toll.
And that's the only thing that is kind of causing me to be hesitant when it comes to rate drops is just seeing what I'm seeing from a consumer standpoint and how, you know, most people, I mean, credit card debt is at an all-time high. It continues to go up. Um, Obviously our government isn't pulling back with their spending either. The government, debt is at an all-time high. It's like the way that we're moving as a country and as a society just to me just doesn't seem like we're in a good direction. And is that rate drop going to be just a band-aid that we need to continue to move at this pace that we're moving? I don't know. That's my only hesitation when it comes to rate drops is do we need to go through a little bit more tough times in order to kind of really change our habits?
Well, I mean, this has got a good points to it because so the way the Fed typically runs their policy. So whether this was intentional or unintentional, but back in part of people who've studied, and I think Bernanke did this with '08, with part of what they noticed with the Great Depression and everything was they did there was a contraction and they also raised rates, which is a double whammy. That's like a double tightening of the belt. And so pretty much since then, and particularly this was Bernanke's argument to '08 and, Geithner's and all them and stuff is what you would typically do. And I know when I was talking to guys on the street, uh, actually 2 days ago, and one of the things is, and this is part of why the curve is inverted a bit, is there's anticipation that the rates will be dropped. But now, so usually when you start to get a recession, the government will typically not turn around and make the market harder or worse
Hmm.
by raising rates. They'll lower them. And so I think part of to your point where the curve is inverted and there's an expectation that rates are going to get lowered, it's either one, it's like what you're saying, maybe we're either in a recession or recession's coming, or two, the hard part is the question is it the recession or is it the fact that the market is reading that Powell is going to be out in May of next year and that Trump is obviously going to put somebody in who's going to lower rates. And so the market's expecting and knowing that rates will come lower. But to fix the economy wise, though, I mean, I agree with you 100%. To me, I think if you really want to fix America's behaviors, America needs to change their behavior with regards to thinking that they're just going to live their life in credit and in debt. And
Yeah.
the only way to do that would be to basically tighten the belt. But I would find that unbelievably hard to believe that the government will behave in that fashion because you don't even really see them tightening back on
Yeah.
um, QT. And this is part of this also ties into your why home prices historically will always keep going up is because the Fed is never going, to cause a deflationary depression, recession. They're always going to come to the rescue.
Yeah.
This is, and so they're always gonna pump more money in, which is always gonna cause more inflation. So
Yeah.
your asset prices will keep going up. Um, but yeah, that's a really good that is
And
an
do
interesting
you
one.
and do you have any concerns about like just the dollar and potentially what the future holds for just, us as a country and
Well, so I think Trump's doing so this is another one that has two heads to the snake, right? So traditionally, if your economy is doing really good, uh, you're paying down your debts, you're doing all the things that are moving in the right direction. What will obviously happen is the dollar will strengthen, right? And if the dollar strengthens, um, that's a good sign. It gives you more purchasing power. But the counter argument to this is, and this is what China has done, is that's great for you purchasing things abroad. But from an employment standpoint and from a strong industrial manufacturing economy standpoint, that's not necessarily beneficial because as wages go up and the dollar strengthens, you become less competitive on a global stage. And so that makes the argument for all these big companies even easier to say, oh, well, the US employee is just very expensive, so I'm going to go abroad for cheaper labor. And this is exactly what China has done is China has intentionally depressed their rates, depressed their market, depressed their currency so that they kept their wages and everything lower. And so they have less purchasing power on a global stage, but it makes it so that they become the world manufacturing power and they don't have unemployment issues, and everything's being made in China. And we've obviously seen that to be a global superpower, you need to be a manufacturer. This is, I mean, what made Germany so great. It's what made Japan so great for their time, and this is what made China, rise so much. Is they have become a The world goes to them for manufacturing, right? America, Trump is trying to do that with America. He's trying to bring back the manufacturing. And if you listen to him, this is where he actually says, he goes, I love a good dollar. A strong dollar obviously says that we're doing good. He goes, but I actually don't mind a weak dollar because that helps me bring manufacturing back to the United States. And so I think if you're taking a short term look, a strong dollar right now is great. Awesome. I think if you're taking a big picture, long term look, I think a weaker dollar could be very beneficial to us bringing manufacturing back to the United States and making us the dominant manufacturing superpower of the world again. And yeah, I think that's kind of the confusing answer that has two sides to it. And I think a lot of, like most things, it comes back to do you view things on a short term or a long term basis? This goes to the whole America deal. Like people who are so fixated, like tariffs. We brought up tariffs before. This is a perfect one. Tariffs, I mean, I had this conversation with the chief investment officer of Blackstone, and we ended up becoming friendly about because of this. Was um, in the short term, it's not looking like it, but tariffs could be, a short term hiccup. It could be not non beneficial, but over the long term, it's hard to argue that bringing all of that stuff back to the United States, forcing these companies to stop relying on cheap labor over in China and stuff like that, where I think was it Foxcom or what is it was it Apple's place where they had to put nets on the building because the guys are jumping out and they were committing suicide. So they're like, oh, we'll just put nets on there so they can't, they can't fall.
But now, do you think that the US is gonna really sustain those same type of jobs?
Yeah, so I mean, honestly, I hate to call them out on this, but I feel like there's been a narrative that said, "Oh, if you're white, you're above working lower jobs, right?" And we see this with Wawa, and we see this with Quick Check, and there's a Bucky's, I believe, is another one down and you see that they hire a lot of white people, and it kind of breaks the whole narrative. And I don't think people realize like I mean, America traditionally was over 65% white people, and we're not all wealthy. There's tons of poor and low income and middle class. I mean, there's tons of poor white people or people who just, and also those jobs. I would argue that if you're 45 years old and trying to have a family and you're trying to work as a gas station attendant to support your family, I think you have a lot of other questions to be asking yourself. You know what I mean? But
Mhm.
those jobs that the media traditionally says are just, oh, they're beneath us. They're jobs that are supposed to be for the kid who's in college. They're supposed to be for the guy who retired and he's getting $1,200 a month on Social Security, and he can get out, be social, and he could put another $800 a month in his pocket. Like I think that's where those jobs are for. I don't think they're supposed to be. So I don't know that I really buy the whole Americans won't take those jobs. And also, I mean, I know a lot of people from up in the Northeast and stuff, they can, in some of these wealthy areas can get pretty privileged and spoiled. But at a certain point, eventually mom and dad are going to stop paying for everything for them. And you're going to have a choice to make. And it's going to be, I can't afford blah, 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 or I got to go take a job. You know what I mean?
Yeah.
And maybe it's a second job. So I don't know. What's your opinion on that?
I mean, I think, like I told you, it's great in theory to not rely on foreign countries, especially with, manufacturing jobs that are crucial for our national security. COVID really exposed a lot of that, I think, and our reliance on these, other countries was really scary. When it came to the fact that if push came to shove, we wouldn't be able to survive on our own. I definitely agree with, getting to a point where we're not so reliant on these other countries. And if there ever was a war, or if, we ever had to basically, help ourselves, we'd be able to do it. I just worry that the direction that we're going down could basically, collapse the dollar, whether that is in 10 years, 20 years, 30 years, whatever the case is. Um, I just worry that the direction that we're heading is only gonna, like I tell you all the time, all empires eventually collapse, and that's my only concern, is that the direction that we're going on is ultimately gonna lead towards that, you know?
The only thing I could say is, so I mean, I spent a lot of the beginning of the year. I was doing a bunch of traveling, and I was in Colombia, I was in Peru, I was in Philippines, there's a bunch of places. And I could tell you is that everybody in all of those places, they still they will pay you a premium to get dollars. They want dollars more than they want their kids
Mhm,
in a joking fashion. And the thing I think to answer that is, the way to destroy a country and the way to destroy your currency, and the reason why everybody wants the dollar, it's not even so much whether the dollar appreciates. They don't even care about the dollar appreciating. What they want is stability and consistency. If I know people that were in Venezuela and they were online to buy groceries, and by the time they got, there are 2 or 3 people back, by the time they got to the cash register guy, their groceries had tripled.
mhm,
Like, these the majority of the world, they just want to be able to have their get paid in their money and not be petrified of losing the value of their money, within days, within weeks, within a year, whatever it is. And so I think the easiest thing and the only way America can destroy itself is if we decide that we want to become like a Zimbabwe or a Venezuela or Germany after World War II. Is the government needs to stop printing money. And there is a difference between interest rates and printing money. And I think Bannon talks a bunch about this. But what happened with the reason why COVID was so bad for us, it wasn't so much lowering interest rates. Um, we interest rates sometimes will cause bubbles and they pop, and Geithner, I mean, Greenspan had done this back in the day. The issue was they printed over $6 trillion during COVID. That amount of money into the system of printing money is what caused all this inflation. Because we
mhm,
had for the longest time, I mean, what? I mean, America pretty much knew 2% inflation was what the Fed claimed for
mhm.
forever. We haven't seen the inflation that we experienced since the 1970s.
Yeah,
So I don't, I really think, if I, just for people, from my perspective, from the finance background, is I wouldn't worry so much about, and I think BRICS is falling apart right now. I think that was the one thing they were trying to put together to be as a competitor to the dollar. Um, and I mean, that's falling apart right now. I mean, I'm pretty sure the whole deal with, for instance, the pressure that's being put on Putin and why he's coming to the table is because if Trump puts on the secondary sanctions, India will know then, India won't be buying their oil from Russia.
mhm,
And India was part of that whole BRICS deal.
yeah,
So I think the BRICS thing's falling apart. I think as more and more of these trillions of dollars are coming in from people investing, I think it's making America stronger. I think the whole world, you see all these people coming to kind of pay homage. I think the whole world knows that we we're back to being, you know, the big game in town. I don't hear that much even talk about competition between China and America. Really, oh, it was always China's going to beat us. China's going to be past us in a year or two. Um, I don't really see that. I mean, so I really think as long as the politicians do not print us into poverty, then I don't think, there's nowhere else to go. I mean, if you think about it, if you're in anywhere else in the world right now, where would you put your money that you're going to get law of order, rule of law, like You're actually going to have property rights. You're going to have, I mean, and trust me, we're far from perfect. We have tons of issues, but where else in the world are you going to go with half the confidence um, to put your money that you know that you're not going to lose your money? It's not going to be worthless a year from now. I mean, where are you going to go?
Yeah, I mean, and right now I agree with you that it's still, that America is leading the charge. I just worry that over time that could change, and our ignorance to that changing is going to basically be the reason, because when you ever even bring up this stuff, I mean, even if you hear our politicians talk about it, there's only a select few that sincerely believe that the direction that we're going on is detrimental, you know? So I think the more that people talk about it, I think the more that people come to the table that, this isn't a good direction. That's really all that I want to see. You know, I don't expect us to make drastic changes, within a year. I just think long term.
Well, and here's the other part. So this is the confusing part. And I'm again, I don't advocate for it. I mean, I'm obviously like quite a fiscally conservative person, but the part that people start to yell about is they start to yell about the numbers. So they yell about 20 trillion, 30 trillion, 35 trillion. Don't get me wrong, they're ridiculous numbers. Um, but what they don't look to and what the finance guys look to is what is the relation to GDP? And so when you look at this, traditionally we were running around something around 102% of GDP. So GDP, I think now for the United States is like 29 trillion a year.
Mm,
And we're looking at a $35 trillion dollars in debt. When you look at that, that's 102%. If you go all over the world to any of these other places, majority of them are running at much higher percentages for one than even we are. And so that's part of the equation. So think of it as if your money and you're like, okay, I make 29 million, I make $29 million a year. Or let's just make it smaller. I make $29,000 a year, but my credit card is $35,000 a year.
mm,
Well, now it's like it's not good, right? You shouldn't be in debt, but I would say that almost 90% of Americans have probably a worse ratio of, you know, their income versus debt levels. You know what I mean? When you account for how much they own on their own their home and on their car and et cetera, right? So when you look at it like that, it's probably like somebody who's, maybe they got into trouble, maybe they had some things, a medical thing come up, whatever, but they could pull out of this if they get their shit together and they're disciplined. They could
mm,
get out of this in the next 5, 10 years. And I think that's honestly the thing with America is if we can get, I mean, at $29 trillion dollars, when you could turn around and if we can grow that, and I think this is Trump's point, instead of growing by 3%, if you grow at 5%, the numbers are astronomical because there's a compounding aspect to it. And I think they're trying to downsize the government, cut out some of the waste. I mean, they're not taking a full hatchet to it, but like, I think all of those things, if they can do some of them, it's chipping away in the right direction. The company will start growing faster. That'll start compounding. Again, I'd like to see America have much better numbers, but I do think if we do the right thing, I do think that we can pull out of this and at least improve the next 20, 30, 50 years. Um, but yeah, I mean, it's a fair point. The politicians are, most of them are pretty corrupted. I mean, I
yeah,
don't, I think that's your point. I think that's the sad part is, and I think honestly, I think Trump's putting a lot of pressure on them. And I'm just being frank. I think if Trump did not come into the picture, I don't know if it was recoverable.
yeah,
They were gonna print us into third world inflation. And but I think they're doing the things in the right direction. I think the world sees that, and I don't think you need to be perfect right now, but I think the whole world still says there's no you have to look at it as I hate him, but he has a really good book on this called Alchemy of Finance by Soros. And he always talks about capital flows, and capital's always flowing to the safest place. So you don't have to look great, but if you look better than everybody else, that's still where the money's gonna flow to. And if the money's flowing to you, you're still the king. And I think you see that with all of the investments Trump got from all those people. That's what
Yeah.
I think is, so I don't know. What's your opinion on that?
Well, one of the things that if it does get worse, and I was talking to somebody the other day about, where was it? Japan, or yeah, I think Japan or South Africa. When maybe Zimbabwe.
Well,
No.
Zim under
What currency
Zimbabwe,
crashed?
well,
No, it wasn't South Africa, I think.
South Africa has been, absolutely getting. I mean, a lot of it's been crashing due to the politics, but a lot of it, I mean, it's been mismanagement and all sorts of things.
Well, they were pretty much talking about, if, let's just say the dollar was to crash, or if the dollar was to decline, one of the main things is owning assets. That's what gets you through stuff like that, and basically assets are the best way to protect your money during times like that. That's what's caused me to consider buying, an investment property. Is I want to right now, me and you are very similar. I have all my money in the bank, and I'm very even conservative when it comes to investing in the markets. Um, what I've found is that money 4 years ago went a lot further than it does today. And so rather than me keep all of that in the bank, I'm deciding to allocate a certain amount of that towards an asset that I feel like long term, not short term, long term, will protect that, value a lot more.
Yeah, and you know what? So you're touching on a really good. This is a really cool topic. This is the dichotomy. What made them at Berkshire Hathaway so amazing was Warren. And people should really read Intelligent Investor and stuff like that by Buffett and Benjamin Graham and all them who was his teacher. But Buffett came from the very much like cash flow numbers, liquidation value, like the assets should be worth more than the liabilities thing, right?
Hmm.
And that was great. But the one thing that Charlie Munger really taught Warren was, okay, if you do that, that will put you on the sidelines sometimes. And Warren had literally removed all of his money from the market numerous times back in the 60s and other times when, like what we're talking about, he was smart. He did the numbers. He says they don't make any sense. I'm going to sit on the sidelines. And so one aspect I do think is people do need to be patient and realize that, you don't have to swing at every pitch. You don't have to
Yeah.
be invested 24/7. So just because, like for us, we're sitting on cash, um, it's it's safer, it's better. I mean, there's big companies like Blackstone. When I was there, we were sitting on 50, 80 billion of cash, a lot of dry powder. So yeah, it's very advantageous to be able to pounce on opportunities when they come up. But if you're extended to the max, you can never take advantage of opportunities. And this is something that he's been super successful because Buffett is sitting on so much cash. When there is a market problem, everybody comes to him and he's able to pick up things at really advantageous, situations and levels
Yeah.
because he is in a means to help out and to save people. You know what I mean? Or
Yeah.
come to the rescue. But the one thing that, on the contrary, again, there's always two sides to stuff. What Charlie taught Warren was that, if you find really good companies that are not just hot right now, but are going to be really good over the long haul, and he called it like building like a moat or a foundation. So they have really hard, where it's maybe hard barriers of entry. It's not easy to become easy competition and knock them out, et cetera. But if they're a really good company, like let's say for him, it was like Coca-Cola, right?
Hmm.
You could turn around and invest in them and maybe you paid up a little bit too much. But because it's such a good, strong company and it's going to keep powering along and compounding for the next 20 years, it might be worth it where, like it's the example of maybe you paid up a little bit, maybe you paid an extra 10, 15% for the house. But if it's in a great area,
And that's the example I was just gonna use was, like, so the way that we're and a good friend of mine, he's pretty much like a brother to me. We're basically going in on a property together, and he's a contractor and I'm a real it's like a perfect marriage together. But the way that we kinda are looking at it is over the next 6 to 9 months is when we think the best opportunities are gonna kinda present themselves. Because, historically, whenever the Fed reacts, because 'cause they're usually a little late to react, usually they have to kinda play catch up, and that's the best time to jump, is when the Fed just reacts. And historically, if you look back, it's usually the best time to buy. Now, that doesn't mean we're definitely buying or we're gonna do it, but what we're trying to do is be more selective, and we're trying to target those opportunities that are just almost too good to be true in neighborhoods that we feel like are just gonna appreciate over time, because during COVID, it was the opposite. People were just grabbing everything just to grab it, and we spoke about it a lot, where everybody thought Airbnb was gonna be the next biggest thing, and people were buying in neighborhoods that historically never rented Airbnb, and they thought that just because everything was booming, that it was going to go just fine. And those people learned quickly that that was not the case, and then they had to sell, usually at a loss. So I think that just being smart and taking your time and making sure that the numbers make sense and not just breaking even, I think that's the good play.
yeah, and I really I think this is the big thing that you're honing in on is you have to take a bigger long-term picture. I mean, I remember I read a book years ago about Exxon and that they would not go into an investment unless it had at least a 15% return, and
Mhm.
and everything that they looked at was on a 20 plus year horizon. And so I really think, to your point, so for instance, let's take Florida. We were talking about the Florida real estate market. I would turn around and say, well, it's pretty clear to me that Florida, there's down the West Palm, down Miami, like it is built to up to wazoo. I don't think people are necessarily going to be going first and going building out in the Everglades or out in the middle of Lake Okeechobee. So Florida still has, it's got great policies. It's doing all the things in the right direction. It's very attractive. Um, People want to be there. Where would they go? And I think the big question is, well, or the big answer is obviously there's not much more room to do it in West Palm. There's not much more room in Jupiter or Boca or all that. And it seems pretty clear to me that it's going to keep pushing up the coast to the, great areas like you're in up in Point St. Lucie and Jensen and Fort Pierce. And I mean, some of these places they're going to get, Fort Pierce has got some areas, but they're going to get cleaned up. They're going to get
Yeah,
gentrified. And I think it's just going to push up. I honestly think eventually it'll be the entire Florida coast. I
yeah,
just, I mean, and it'll actually probably come down a bit because everybody is loving Savannah. You got Charleston, Hilton Head, Savannah, and then you've got a lot of the islands off Georgia coming down. I mean, I almost have no doubt. I mean, it might take 15, 20 years, but I think the entire coast, um, from Georgia, all that from the Carolinas all the way down is going to
yeah,
be um, prime real estate. I mean, location, 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 and by the water,
yeah. You're right.
and so yeah. I mean, and that area. I mean, they get hit with hurricanes, but it's not anywhere near as common as Um, it's a bit farther up into the thing. So I think my whole point is if you invest there now, it almost seems I would be shocked from looking at your downside perspective. I think you got very little downside.
Mhm.
You're getting the properties for much more affordable prices. You're ahead of the game, but it's moving in that direction. Uh, and you're gonna get the asset appreciation, but it also makes sense from the cash flow standpoint.
Yeah, yeah,
So I mean, I think it's a home run if you're up there. Like I said, I think my uncle's gonna end up doubling his money on his first house and doubling his money on his second.
yeah, yeah, probably.
So yeah, I mean, yeah, man. So I think I think it was definitely a nice, good cover. I think we did a
Yeah,
lot on we did a lot on the. I
we're
think we
almost
did a
2
lot.
hours.
Oh my god, yeah. And I think anybody who's interested in the Florida, Jersey real estate market and all that stuff, I think this is hopefully very helpful, and even some pointers in where to go. I think definitely they should they should check you out. Where can you find your
Um,
information and contact you?
yeah, so you can find me on Joe Tumalo Realtor is my tag on all social media platforms. My website is treasurecoastflrealtor.com, and you can find me pretty much online if you Google me, Joe Tumalo Realtor,
All right. And Joe's also down in Florida on the Treasure Coast and down in
and
Palm
in New
Beaches, but
Jersey.
then you're also in New Jersey. So
Yep,
that's another big one. And I'm gonna end up putting all the links to contact Joe below. So it'll be easy to see that. But awesome dude, great realtor. I mean, I know you've sold all my family members have bought from you and they're happy. So but yeah, man. So I thank you for coming on, and I
thanks for
think
having me.
a lot of good information. So
Thanks, buddy.
no problem.
That Joe genuinely cares about us and wants what's in our best interest. He treats us like family. We first met Joe in February of 2020. My husband and I were searching for properties online, looking at the Treasure Coast, and Joe responded to one of our inquiries, and the rest is history. Honestly, Joe just projected a genuine enthusiasm, and his integrity just came through, and we could just tell that he was somebody that was really looking out for our best interests. So during that time, during the pandemic, when everything was in so much flux, he's just a genuinely super human. I mean, he's just a good person, and he cared about us. So as we all had to flex and adapt, we just rolled with the punches, and we did what we had to do. And during all of that, he made sure that all of the boxes that needed to be checked were checked for us.
Eros Expeditions is a sailing yacht charter company excited to give their customers the most unique and amazing vacation where they can travel to their favorite destinations in luxury while experiencing amazing food and culture with family and friends. You get to travel with no crowds and have the flexibility to move at a relaxed pace. The yachts have a full kitchen on board with dining for 8 inside and out and are kept to a limited number of guests, making sure the experience is relaxing and stress-free. If you're looking to kick back and enjoy the warm, clear waters of the Caribbean, then the Bahamas, the British Virgin Islands, the US Virgin Islands, St. Martin, and St. Bart's may be right for you. If you're more interested in culture, ancient cities, gastronomy, wineries, and history, then Croatia, Greece, Italy, and France are perfect choices. If you're looking for more exotic destinations, then definitely check out French Polynesia, Mexico, and Thailand. The company began with a love for traveling the world, experiencing new and exciting places, and sharing them with amazing people. Getting to combine them all with sailing, snorkeling, fishing, paddleboarding, and scuba diving makes for the perfect vacation experience. Book your reservation now to experience travel like no other at erosexpeditions.com or andrewsabia1 at gmail.com. Links in the description below.